Good morning everyone, this is Lance, an equity analyst of ABCap, and welcome to Daily Trading Notes. For the US markets, the major indices reversed significant losses as major tech names surged ahead of the release of their quarterly reports. In addition, US 3Q GDP grew at an annual rate of 33.1% versus 32% estimate by economists surveyed by Dow Jones and 31.4% plunge in 2Q. In terms of raw percentage, the US economy contracted 2.9% in 3Q and 9% in 2Q. The annualized rate represents GDP growth over the course of a year at the current pace from the same level a year ago. Nasdaq was up 181 points, Dow Jones was up 139 points, while the S&P was up 39 points. For our market outlook, local markets may follow the rally in US markets last night, following 4 consecutive days of drop in the local bourse. Market may also take its cue from earnings releases in the next few weeks. Out of the 8 companies that have released their 3Q results, only 2 companies were ahead of estimates, while 3 were in line and 3 were behind. Meanwhile, India, Indonesia, and Sri Lanka markets are closed for holiday, while the Philippines will be on holiday on Monday. In other news, crude oil lowest in 5 months, Biden win may result in Iran oil resumption, which will be good for the Philippines. Crude oil has tumbled to $36 per barrel and fallen 41% year-to-date, making it one of the worst-performing commodities this year. WTI fell to the lowest level since June as the U.S. economy remains to be fragile despite the strong GDP figure last night. Amid the softer demand and resurging of COVID-19 cases, a Biden win may likely hit further on crude. Reports say that a Biden win may boost prospect that major crude oil producer Iran might regain resumption of oil supplies once the Democratic Party prevails on the November 3 elections. Iran has the ability to generate around 3.8 million barrels per day, meaning such an amount entering the saturated market would send the Brent at around $35 per barrel and the WTI possibly below $30 per barrel. On the local front, however, this should be good for the Philippines as the country remains to be a net importer of crude with around 98% of our oil requirements studied. Also in other news, Dito on track for March 2021 launch, looking to dominate industry. Dito's press conference yesterday announced that it plans to dominate the telco industry and grab significant market share and eventually be a market leader in the already saturated mobile market segment. Dito hopes to launch by March 2021 or even earlier. Currently, Dito has already constructed as much as 1,532 cell towers from 859 in September, enough to satisfy the 37% coverage as required. In addition, it has likewise completed 4 technical 5G calls this month. Dito has likewise started production of SIM cards ahead of its launch and has spent as much as 150 billion pesos this year. It targets its capex annually at 50 billion pesos per year in the next 4 years, and possibly do a follow-on in the next 3 years as mandated. Note that the mobile number portability will likely be operational by mid-2021, which allows users to change networks without changing their number. This should benefit Dito. On the same day, Globe also announced it's spending 189% more for fiber-to-home network ahead of the tightening of the telco and broadband space. And that's it for our market outlook. Have a good day.